Bring in Damp Spring Advisor CEO Andy Constant. Andy, great to see you again. How are you
Hey,
trading
Melissa.
this?
So, since I was last on August 1st, the 10-year is up 35 basis points, the 30 is up 40 basis points, the S&P has fallen over 5%, and the NASDAQ over 6%. Some of the high multiplier ETFs like IGV are up significantly. Those are pretty big moves. And I think the principal reason, there are lots of catalysts, but the principal reason was the surprise issuance from the Treasury. They just issued significantly more than even I expected last time we spoke.
So how are you positioned? I mean, do you think that the equity markets should go much lower from where we are right now? Do you think rates are going much higher? How are you positioned?
Yes. Yeah, so equities have really actually performed fairly well given the amount of increase in yields. I think they should have to catch down to the fall in bond prices. They may have been held up by strong economic numbers. I think equities will fall between 4 and 5% before the bond market levels and the equity market levels get into line. But bonds are going to continue to be under pressure. They don't go down in a straight line, and I have to say I've covered some of my bond shorts. But I'm still bearish bonds and stocks because the driver of Treasury issuance was just announced. It hasn't really come to market yet. When it does, and if banks have to issue long-term corporate debt, or the Chinese or Japanese currency markets have to be supported by the official sector, they'll have bonds for sale too. And so that combination of things should impact long-term rates to 25 to 50 basis points before supply comes back into balance. And that should take over the next 6 months.
Andy, it's Karen. Thanks for being on. Excellent call. 10 days here, whenever it was. Seems like a long time ago now. But so they made this announcement, and I would wonder, does the market, all right, the market knows how much there is to be issued, when it's going to be issued. So it's sort of a little bit surprising to me that you think the actual issuance itself would be the catalyst when, isn't it the sort of knowledge about the issue and how much paper there is to go that I would think would be how the market would price it now?
Right. I think that's right. And you have to think about the amount of money that can front run something like this. In certain circumstances, like a small rebalance, you don't need much money to front run all the move out of the market and price it in. But we're talking about, approximately $200 billion of surprise coming in the fourth quarter and more in this quarter in bond issuance. And there's just not $200 billion of money that can be front-running bond markets. So I think we're going to have a situation where the front-running will do some, maybe half, I don't know. And then the actual supply will affect the market on an ongoing basis.
Andy, I want to go back to the interesting point that you brought up in terms of other selling pressures around the world, such as from Japan. Did you say 25 to 50 basis points of impact?
Yeah, so I think the overall impact of both the potential catalysts out of Asia for currency defense and the large supply is worth about 25 or 50 basis points on 10 years.
So we could go to 4.5, is what you're saying.
Sure.
That's
sure.
totally within
sight. Straight line, but sure.
Right.